Well, we are nearing the Q1 earnings season, and almost all the Nifty companies have declared their results, and it's been a fairly mixed quarter. In fact, close to around, if you look at the earnings picture, nearly around 22% of the Nifty earnings by weightage have reported a performance which have been above expectations. Close to around 35% of the Nifty companies did report an inline performance. Nearly around 25% performance was slightly below expectations, and the rest of them did post a kind of a mixed Q1. If you look at the key sectors also, well, within the key sectors we did see good performance coming in from cement, metals, healthcare, as well as oil and gas. These sectors have outperformed in terms of result expectations. Autos, NBFCs, as well as capital goods did underperform during this quarter, and sectors like IT, consumer, as well as private banks did report an inline performance. Results have been far better than expectations for companies like Ultratech Cement, Asian Paints, ICICI Bank, Hindustan Bank, Sun Pharma, JSW Steel, IOC, Reliance Industries, Tech Mahindra, as well as Wipro. And some of the companies which did really miss expectations were Bajaj Auto, Maruti Suzuki, Tata Motors, L&T, ITC, Nestle, SBI Life, Bajaj Finance, as well as Dr. Reddy's. Sectorally, IT sector of course did perform fairly strongly. We did see a fairly strong demand, a very healthy deal pipeline. Most of the companies have guided for a double-digit growth in FY22, and some of them even revised their FY22 guidance upwards. But yes, of course, we're seeing attrition rising and margins coming under slight pressure. If you look at the cement companies, well, it's strong price realization and better cost control was witnessed in quite a lot of the cement players. Quite a lot of cement players have also announced strong capex plans. Autos were impacted on account of high RM inflation, as well as operating deleverage. If you look at the consumer companies, well, most of the companies have reported double-digit sales growth, although on a soft base. Companies were better prepared this time to deal with the lockdown, and we did see robust performance coming in from the likes of Jubilant and Asian Paints, as well as United Spirits. Within the entire BFSI space, well, we have seen slippages rising in for the retail sector. MSME as well as the SME sector has been under stress, but most of the banks have already made significant provision buffer. Quite a lot of the NBFCs, for instance, Mahindra and Mahindra Financial Services did post loss. Ujjivan Small Finance Bank did post loss on account of the stress in the MFI segment. For Ujjivan and Mahindra Finance, the cash flows of course for their customers were impacted, and if you look at Bajaj Finance also, we did see some of the impact coming in for the auto segment. Most of the bankers also did mention that corporate credit cycle is yet to meaningfully pick up, but quite a lot of the companies have also announced some amount of capex plans, and they expect some amount of pickup in corporate credit growth, especially in second half of FY22. In fact, MOTILAL OSWAL states that management companies to indicate recovery is setting in. MOTILAL remains overweight on sectors like BFSI, IT, metals, cement, and capital goods. They are neutral on sectors like consumer, auto, and healthcare, and they are underweight on sectors like telecom, energy, as well as utilities.